This is all about stocks. My name's Alan, and we're going to be talking about taxes today. Everyone's favorite topic, taxes. And I do want to apologize to everyone who's been watching my channel. Turns out that my channel had no volume. Someone let me know earlier today, actually about an hour ago. My channel had no volume. Evidently, only about 3 or 4 out of my 20 or so of my videos, only 3 or 4 videos had volume. I do apologize. I'm sure everyone thought I was ridiculous. I do apologize. I had no idea. I um, I do try to watch them. I don't actually watch many of them without volume due to the fact that I cannot stand my own voice. So, excuse me. Uh, with looking at taxes, I'm going to just minimize this one just so I can try not to skip over anything. If you'll just give me a second. And of course it runs away from me. It's one of those things that well, I'm not going to be able to do that. Alright, so taxes, day trading. We're going to look at the 1 day. So, if you do day trading on the 1 day, let's say you wake up early in the morning, 8 a.m., and you try to buy the dip. You purchase here or here, and you get real lucky and you sell here. Well, let's back up. Let's say you sell here and you buy here. So you buy at 365, you sell at 364. You're doing great. Let's say we're only using one share just to make it very simplistic. So you already made we're just gonna round here. You made $1, and then you made that $1. Now you have the early I went ahead and paused it, and I was trying to think of the name. I think it's just taxes at 30%. I know at long-term capital gains tax, I think that's 25%. Don't get me lying. Once again, I'm not a tax advisor. I'm not a financial advisor. But, so, that would be short-term capital gains. That's what it is. So, right there, you have short-term capital gains. That would be right there, 30%. 30%, you do it again, and you made another $1. So you have you made $2 just right there, and you've already had to pay 30%. So you bought one, bought two, and you're at 30%. Now you bought it again all the way up to here. So bought it at 364 all the way up to 367. So that's $3. Now you have to pay that $3 in capital gains. The difference between buying and holding for, let's say, a year, that's long-term capital gains. And I think they only tax you at 20%. I know that doesn't sound like a big difference, but that 10%, it is a big difference. Now, so now that you understand the difference between short-term and long-term capital gains or taxes, now you've already bought 2 times. Now, if you try to do it a third time, now you're running into day trading. So let's say you went ahead and sold here at 367 and you bought in again here at 366 and tried to sell at 367. Well, now you're buying at your third time. Well, that's it for the week. For the next 5 days, next 5 business days, U.S. market days, that's all you can buy. If you try to do it again, unless you have 25,000 U.S. dollars in your in that market, that fund that you're using, then you cannot do any more trading. You can buy on a Monday, sell on a Tuesday, but you cannot do any more swing trading on a Monday and sell again on a Monday. So on a Monday, buy, sell on a Monday, you can no longer do that. That's how they have it set up. Now, just my little notes I have here. Dividends are taxed differently. I believe they're taxed, and I think it's capital gains. Whitewashing. Whitewashing is something that no one told me about. It's probably something no one will ever tell you about unless you really look into it. Whitewashing is if you buy at 367, turn around and sell it at 366 and wait for the next day, buy it again at 365. Well, that's whitewashing. I'm sorry, I said that wrong. If you buy it, and whitewashing is very confusing. If you buy it at 367 and then you buy it again at 368, sell it, and then buy it again at 366, that's whitewashing. I believe. I'm not 100% sure because whitewashing is that confusing. They do not want you to buy, sell at a loss, and then buy it again at a higher price so that you can declare a loss. And that's for tax write-off reasons. So that is what whitewashing is. So the price is where it gets confusing, is how you have to transcribe all that into the price part. And I've had Fidelity, TD Ameritrade, Robinhood, all of them try to explain it to me, and everyone themselves gets confused trying to explain it to me. So it's very confusing, and it messes up the taxes trying to explain or trying to do it. So just be on the lookout that if you buy the same stock month after month, try not to buy the same stock within a 3-month time period. So I do apologize for not having the my sound. Have a great